Good morning, everybody. Welcome to the Wednesday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope you guys are having a heck of a day as the markets had a heck of a roller coaster ride yesterday. Let's see what happens today. If you're new to the channel, click the subscribe button, hit the notification bell so you get the alerts, the updates, all that fun jazz. Real quick announcement that I wanted to point out. We are doing a live in-person Trader Summit. That's right, live and in person. A lot of people have been asking about it. If you go to tradersarmy.com/summit, you can see what we are going to be putting on. It's going to be a live event in Anaheim, California, May 16th and 17th. We'd love to have you there. Great speakers, Brandon Wendell, Sam Evans, Corey Lane, Herman Casas, myself. We're going to have trader taxation experts. We're going to have people talking about how to manage a trade plan. We're going to have a head of a major brokerage firm actually going to be there, along with a CBOE former floor trader. So it's going to be a heck of a day. Tradersarmy.com/summit to sign up. Looking forward to having you there. So let's go ahead and dive into today's daily market commentary. All right, starting first with the S&P. So looking at the ES, we have a daily chart showing yesterday's price action. Now, the price action from yesterday, I put the daily chart up because it was a really interesting day, and a high wave reversal candle is what was formed on the daily chart from yesterday. High wave, meaning that we have high or very long wicks and a relatively small body, and those wicks are about the equal size. So a high wave reversal candle formed yesterday has not put in a clear bottom, certainly, but what do we have on a smaller time scale? Well, let's look at that, what that looked like yesterday. Well, and the reason it's a high wave is because we rallied up in the overnight, giving us a little bit of strength, but then we saw a bunch of selling pressure come in, and then throughout the morning, we saw the market sell off. Now, in the afternoon, we rallied back up, and so essentially, when we kind of look at what happened throughout the day, we didn't have a whole lot of positive movement. It was just some ups and some downs. So now what are we looking at based on the overnight trading? Well, we are up about 27 points this morning, but it's up 27 points, but it's kind of meh on that up, right? So a couple levels that we were looking at yesterday, we looked at this area right here for a 15-minute long trade, but knowing that it's counter trend, it had to be a confirmation entry. And so certainly that blew right through, not giving us a good entry. And you certainly had an opportunity to get long at the origin of this move down here. And, hindsight being 2020, that was a good trade. In all reality, it's not a trade I would have taken because we've hit that a couple of times. So I wasn't really very participative in yesterday's market movements. I was waiting on a supply level up here that just never came to fruition. So what am I looking at for today? Well, let's look at my demand levels below me because we're up 26 points, so we've got to rally up throughout the day, huh? So looking at our demand levels, I've got this area here. Well, we're bouncing off that now, and that's a retest this area to the left. Well, what about this long wick right here? Oh, contraire, mon frère. That level is a retest of this area right here. Now, this area is a big move up, a drop, and then a strong rally. Here's the retest, and then price already moved away from there. So you say, well, what about this area here? Well, we already talked about the fact that it's a retest of this level down here. So what does that mean? Well, that means none of my demand levels below me are quality enough for me to take a long trade. What about a short trade? Well, as I look up above me, I have a little itty-bitty level right there, 15-minute chart right there. I've got a little 15-minute level right here. So 2 levels right there stacked on top of each other in a 15-minute chart. I also have a potential breakdown right through here. Okay, I actually like the breakdown trade as the better entry, but the upper level could serve as a decent reversal. So in this case, what we're doing is we're essentially playing the Globex high and the Globex low. But I think that those are both okay areas. Now, why did I put this as a confirmation entry? Well, the reason I put that as a confirmation entry is that we are definitely seeing our 4-hour a little bit slowing momentum, okay? A little bit on the slowing momentum side. And if we continue to get a rally higher and it's a short covering rally, we could cut right through there. So I do like the breakdown below 43.12 as really the best entry. Now, looking at the NASDAQ is up 138 points this morning after taking it on the proverbial chin yesterday. Now, we did talk yesterday about if you were so inclined to take a breakdown, or excuse me, a breakout above this region here, there was an aggressive move. And while that did give us a move away, we didn't truly get basing in front of the level, and we just broke out and then just came hammering down, right? Just really came cruising to the downside. Above us, I will say that I did not wrap my lines around this area yesterday because, frankly, I didn't think we were going to get there. But that was really the entry of the day, was this little base drop below the pivot high. Once again, hindsight being 2020, it's the way to go. But that ship has sailed. So a breakdown below here, just like the S&P level, I think is the better way to go. But no clear demand down below us. Looking over at the Russell 2000, boring. Not a lot to do here. Really would be pushing it. 4-hour chart, I'm in between areas of supply and demand. What I don't want to see is anybody go out there and force trades because they think they have to make a trade. If it's not a setup, don't take it. I want to slide over to energies and metals, looking at crude oil. So crude oil, we got a pretty strong rally up yesterday. We retested back into this level. We rallied out of it. We retested again, got a rally out of it. But 6 candles later, it had gone basically nowhere. And now we're back into it a third time. So why do we even have this level marked in the first place? Well, that level was a pretty good little area, rally-based rally. But our 4-hour is definitely showing signs of weakness, right? Now, knowing that I'm looking for a bit of a candlestick reversal pattern here, because that's really what I'd like to see on the weekly chart, is a bit of a nice candlestick reversal pattern. I still think that we're going to see a little bit of weakness overall in oil. Now, what are we seeing right now is a bit of a stall. It's kind of a stall technique, if you will, on the markets. It's just moving up and down. And I think we're waiting on major movements on what's going to happen with Ukraine and Russia, as we saw the West impose some sanctions yesterday, but it didn't really have a material effect on these markets. So, as it stands right now, crude oil, I'd be interested in seeing if we can continue to roll over from here. And I think your breakdown level is there, but it's not super clean. You've got 1 touch, 2 touches, but it's really a little bit of a violation. So that might make you want to drop this down to here. But then I don't have 3 touches. So I don't really have a clean breakout trade at the moment. And even if I look at this region here, that level's already been touched and we've come close to it before. So what I'm saying here is none of these levels are anything to get super excited about, right? This one up here, 93.17 by 93.62, is fairly clean. But that would be, in my mind, probably the only one worth really looking at. So, and we're seeing the same thing essentially in currencies. We're hiding between some levels in currencies. Gold is, looks like we're seeing a momentum shift and a bit of a rollover in gold. I look to this right here to see, do we get a breakdown in gold? And if we do, you've got clean air to run down to 1878. So look for a breakdown below 1890 in gold with the proper amount of basing. Looking at our crypto futures, starting with micro Bitcoin, we did rally off of the demand area that we had put in place a while back. And I think that may have come from the origin of this move higher. We've rallied up off of there, started to get a move away. I'm going to come up into here and look at that gap zone and wonder if that gap fill area is going to act as a supply level. Now, from the 4-hour perspective, our trend has started to come back down. we are back down again in that trend. Look for a breakdown below these lows right here. Ether as well, we broke down below our breakout line, came to the demand area, and just kind of stalled, right? Just kind of at this area of possible demand. Has rallied back up a bit. Let's see if we use old support as new resistance and come back down off of this level. That's ultimately what I would look for on here, is for this to act as resistance. So all in all, one of the things that I would say today is don't force trades. If the trade's not there, don't take it. Allow the market to come to you. We certainly have opportunities, but I think we've got to wait for the right setups and the right trades. Once again, go to tradersarmy.com/summit if you think you might want to join us in Anaheim on May 16th and 17th. I'm looking forward to a great event. It's going to be a good time, but seating's pretty limited, so go sign up today. But that's all I have, everybody. Hope you guys have a great day. I'll talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.